The following program was paid for by Templar Real Estate. The views and opinions expressed on this program are not necessarily those of the staff and management of WMTR. As always, it is advisable to consult a professional before making a major decision. It's time now for the Templar Real Estate Talk Show. Here's your host for the program, Joseph J. Zoppi.
Hi, this is Joseph J. Zoppi. Welcome to the Templar Real Estate Investment Show. I'm a real estate investor, consumer advocate, author, and managing partner of Templar Real Estate Enterprises. You can reach us at templarcashforhouses.com, or you could call us at 973-315-7990, and we can answer any of the questions you'd like. You could email us as well, and we could answer the questions on the show or directly, depending on if we get in touch with you. My company is a real estate investment firm. We buy houses for cash. We purchase apartment buildings. We do joint ventures with other real estate investors. We loan money for rehabs and provide transactional or gap funding as well. We work with individuals that want to invest with us in single-family houses up to apartment buildings. We do not speculate. We're very protective of our money and our investors' money. I'm not a real estate agent. There's another individual that has the same name as mine, and he is a real estate agent, but I am not. I have individuals on staff that are agents that will sell your house through the traditional multiple listing service, but we are not a brokerage. The show will go through everything about real estate, those things that impact real estate. We will talk about rehabs that we've done, some of our investments, what went well, what challenges we had. We will discuss trends in the real estate market. We'll discuss the economy, and we'll go over anything that has to impact with real estate. Real estate is your biggest investment, so it's kind of important that you know as much as possible about real estate. I provide an opinion. That's all it is an opinion. I ask everyone to do their research, everything that you do. If you work with an attorney, make sure you do the research. CPA, double check, triple check. I always say that. Even when you read something on the internet, understand where it's coming from and, the slant that might have on the article for a particular way. And we'll talk a little bit more about that shortly, but, my biggest thing is to look at the numbers and look very carefully, just not take it at face value. So I got one phrase, here we go again. So we've all looked at this. We've all been through this. The markets are down a lot. This is as of today. My recording's Thursday towards the end of the day. The markets have taken a major hit again. I've been through this numerous times, just like a number of you, during the dot-com boom, as well as 2008. It's just, it's an old story that continues to happen and will continue to happen. It's that simple. That's if you're in the market. We, as a real estate investment firm, we are really leveraged in multiple different ways through real estate. My private investors have lost zero as a result of this, and they're very happy. So I've gotten numerous calls this week saying, Joe, I am so happy. I'm investing in real estate with a rate of return that I know is going to happen. So I have a lot of happy investors right now. So we're very happy about that. Right now, again, you have this institutions, they're always pushing for you to put money into the market. It doesn't matter what it is. You have your mutual funds, and how do they make money? By you investing with those mutual funds. You have your brokers, all your IRAs, your 401ks, they're always, for the most part, in markets, usually. Sometimes in the bond market, but a lot of times the slant is always in real estate. I had a number of calls this week, so it was pretty interesting. So I have an ad that is publicized on the radio that talks about when the market goes down, a 30% loss, you'll lose, 60% of your gains if you had doubled your money. And a number of individuals said, Joe, I heard this ad before even the market was going down. And where'd you get this 30%? And how'd you know, the market was going to go down 30%? And I didn't know the market was going down. There's no way of timing the market. But I knew when there was going to be a problem, we were going to take a major hit. That's just the way the markets go. I traded for a long time with stocks, derivatives of all types, and I've traded on both sides of the market when I thought the market was going up and when the market was going down. So I'd always try whatever which way to figure out that. Sometimes I get on the wrong side, but a trader trades different than an investor. So once we hit a certain loss, we jump right back. We jump out of it. Whereas traditionally, investors for the long term do not do that. And some do, but a lot don't. And as a result of that, you might have taken a 30% hit, which I think you'll be taking right now, where I think we're at 20%, maybe a little bit more. So, we're in bear territory, and I think there's going to be additional pain. That pain I think it's going to come down around to 30% loss before it rebounds, maybe a little bit more. They're talking maybe around 38%, 40% before the rebound. But with that being said, that money's not coming back this year. Maybe come back next year, the year after, but the markets aren't going to move up all the way, and you're not going to get all your money back. That I could guarantee. There's certain things I cannot guarantee. That's a guarantee. If we get a 30% hit, we're not going to do it, or 40%, forget it. Markets do not go up as fast as they come down. So, within X amount of weeks, you might be down 20, 25%. So that's just the nature of the market. And when it rebounds, sometimes it'll rebound fast, but there's only going to be so much follow through, and that's it. Whereas when the markets go down, you start seeing lots of follow through, and the numbers are very big when there's losses. They're just very big, and that's why, as I said in previous weeks, as a trader, we used to like the market to go down because the numbers were so big. Whereas going up, it was incremental, whatever that was. It could be 1%, 2%, 3%, so on and so forth. But when it goes down fast. We had an event in April that is closed out. It was for private investors. I've exceeded the amount, and we're going to have another one in March. Excuse me. So the one in April has been closed down. Now the one in March is closed down, and the one in April is now open. So you'll be hearing more about that shortly. So, and that has to do with investing in real estate, partnering with us, getting consistent returns, using your IRA, 401k, and the equity in your real estate to invest with us in real estate. We had a lot of demand for this. We're also having private discussions, one-on-ones. So if you're interested in a one-on-one discussion, please give us a call. We'll meet somewhere and we'll talk either at your house or some other location, either our office or somewhere else, and we could just chat. And, there's no hard tactics with us. That's just not the way we do work and we do business. Even when we're purchasing houses, when we don't do the strong arm, There's none of that involved. When we bring on a private investor, we bring on a person that we're very comfortable with, that we could be their friend. That's how we do it. We want to feel very comfortable with the person. We want to have frank conversations. But that's just the way we do business. It's not about the money. And just bringing on a private investor to bring on a private investor. So, because of that, I sleep really well. My investors sleep really well. And like I said, we've gotten numerous calls this week, texts, emails saying, Joe, I am so happy. So we're really, really pleased with that. Another one is we're having another lunch and learn. It's April 17th. It's for active real estate agents and brokers. And that's going to be at 12 noon at the Marriott Courtyard on Route 46 in Parsippany. It's right near TGI Fridays. And it's going to be about how to increase your commissions, profit sharing, how to earn profits from flips that we're doing. And we're looking for exclusively real estate agents that want to hustle and want to grow their business. Again, there's certain things that we look for. We don't want to just bring on people to bring on people. As I said last week about Uber, originally with Uber, Uber transformed the cabbing industry or limousine industry, we'll say, ride-sharing industry. So 10 years ago, you wouldn't have thought of using someone else's car or having your own car being used and having strangers in your car driving them around. So things have changed. Things continue to change. And some of the things that we're going to be doing in real estate, and we're partnering with certain companies, is really going to change the way agents do business. And as a result of that, they'll be able to make bigger commissions, profit sharing, things that will really make a positive impact in terms of how much they're making. So I'm going to go over a few things today. I'm going to go over certain things that we encountered this week. I'm going to continue to go over the markets and as well as some rental trends. So I don't know if I'm going to be able to get in touch or complete everything here, but we'll see. So right now I have my Township Pet Peeve for this week. So like I said, we deal a lot with townships, so there's always usually a pet peeve when it comes with that. So we listed a property in West Orange, and we needed to get a CO for them because they had a potential buyer. We thought it was a definite buyer. So we went down. It was $100 for the CO. And we later found out that before the inspection occurred, the potential buyer decided not to purchase the house. So, we spent $100 and we spoke to the inspector. And the inspector said, well, you got two options. You could use it next time when you have a buyer, or you could get your money back. Getting your money back is a little bit of a pain in the neck because the money has to be approved by the town council, and this takes weeks and weeks and weeks. So we said, well, we're going to sell it, and let's just keep it on account. So 5 months went by. Finally had another buyer. Went down to reschedule the CO. And they said, basically, no, you have to pay another $100. We're saying, well, but we never was done for the other one. And they said, well, no, it's just tough luck. So, of course, I don't take that easily. We just don't roll over. And we're pushing very hard with the township, even though they don't want to give us the money back. So we're going through this with them. We have a couple of options up our sleeves, which I'm not going to talk about right now. But, they said, well, it was a pain in the neck. The inspector wasn't supposed to say that to you. They gave us a bunch of excuses. And they said, well, it was also 6 months and it was only supposed to be for a couple of weeks. It was like, nobody said anything to us about any of this. Now, all of a sudden, these are the excuses. And, a lot of the townships just have this cavalier attitude. But if they had went to a store and spent $100 and the store said, well, tough luck, you're not getting anything for the $100, I don't think they'd be so cavalier about it. And that's unfortunately the way this is sometimes with municipal governments, that, it's just, they really don't care. And that's something that I just still get crazy on. It's really a major pet peeve of mine. And we fight it a lot of times. We just don't roll over on stuff. Doesn't mean we always come out ahead, but I will not give up on certain things, and we'll push it if we have to. Another thing that's happened this week is that we had put a house under contract. It was a couple weeks ago, and we agreed to a price. And once we do that, we do our title search, so on and so forth. One of the things that came up on the title search was a bunch of liens. Those liens had to do with some medical things, dentists and doctors and a few other things. So what we do normally is we'll negotiate for the seller to drive down those liens, because most of the time people just say, okay, I'll pay the liens out of the proceeds of the house. So we push very hard, and we have an allegiance to the seller, and we work very hard to reduce those liens. Certain things we can't negotiate. One of them is like a mortgage. So if it's a primary mortgage, we definitely can't. If it's a secondary, depending on the situation, we have been able to reduce that number sometimes. The other thing we cannot reduce is this town taxes. So if property taxes are due, they're due, as well as water. But anything else, there's a chance we could negotiate down. We've negotiated down HOA fees, medical liens, a lot on medical liens, and some other liens as well. But we don't have to do that, but we want to make sure that we maximize how much our sellers are getting. That's very important to us. I had another situation with an agent. So the agent was selling a property, and this property was a colonial, 4 bedrooms, 2.5 baths, nice property. It's been abandoned. There was no electricity on, and there was like 3 feet of water in the basement. So it seems like lately I've been getting so many houses with water in them. It's just, I've never had so many. So the agent says, put your best offer in. So we didn't know everything that's going on because there's no electricity. We have no idea what's going on in the basement. Obviously, with 3 feet of water, forget about the furnace, forget about the water heater. And I think the electrical panel's fine, we hope. But we're not sure about that as well. So we gave them an offer. And we had to take into account a lot of different things. And there's a lot of unknowns associated with it. So we did that. The agent told us kind of where we needed to be. We said, we cannot be at that number. And we said, but if it falls through, then we'd be more than happy to give it at the number we were originally planning. Because originally he said there was like 5 other offers going in. And it seemed like 2 or 3 of them were higher than ours. He came back to us and said, Joe, we still want to go with you, even though you have the lower number. And the reason for that is one thing, is because he knows when we sign on the dotted line, he's going to get the money in the end. We have the money to purchase it. whereas other individuals will put in an offer and they can't deliver. Or they can deliver, but it's not on a timely basis. It might take, instead of a month, it might take 2 months or 3 months, so on and so forth. So it's very important for an agent to be confident that the individuals they're working with can deliver. So we have that all the time. We had an attorney contact us, it was a couple weeks ago, and he said he had a property. The owner, it was going to foreclosure, and he was able to push the foreclosure out. And it was in the family for like 30 years. It was a 2-family, and it needed work. And what he wanted to do, because we do a lot of different creative type of transactions, he said, Joe, what they want to do is stay in the house. They want to pay rent and like $500, and they want you to rehab the house. They want you to purchase the house, rehab the house while they're still in it, and then they want to buy it from you. And, I looked at it, I said, well, we can't do it that way. First of all, the $500 was going to cover, probably monthly would have covered maybe the property tax, maybe. It would be a little short. Then we'd have to obviously have renter's insurance, and we'd have to have, the cost of carrying the property, and then we had to do the rehab. And I said, we can't do it. The other thing is with rehabs is we take out insurance for the property. So it would be a combination of renter's insurance, and in case they get hurt or anything happens, and we'd have to do a rehab insurance. So that would be a problem right there, because if we had rehab insurance, you can only have one or the other. If we have rehab insurance, it's expensive, which is fine. It's always taken into account when we do our work, but you can't have anyone living there in the event someone gets hurt. And that's how the policy is written. And I said, we just couldn't do it. And no matter, it was just impossible to do. So I got in touch with him. I just followed up with him past couple of days. I said, yeah, how did it go? Because the house was going to be taken away. And he said, no, fine. We had like 4 offers on it. So, and they were all pretty good offers. So someone decided to do it. Now, the risk from an investor perspective is a great deal. Now, anybody that wants to do that I just couldn't do it. From an insurance perspective, you'd be violating the insurance rules for that policy, as well as if you rehab the house and then they can't get a loan, then what do you do? Do you kick them out of the house? It's just, and then to evict a person could take a year. It could take a while, depending on, how the deal was formulated. It could take months upon months upon months. So anybody that wanted to do that, the numbers were not there. So, there's always someone out there to do it, but, the risk involved in that it's just not prudent. So I'm going to just go over a couple of quick things with you in terms of the market. So there's 3 different types of markets in terms of bear markets. And there's one that's a structural bear market, and on average, you'll see drops of almost 57%. And there's cyclical bear markets, and you'll see a drop of 31%. And a structural bear market is created by just imbalances with financial bubbles, very often by price shock, deflation, things like that. Cyclical bear markets are typically a function of just the economic cycle. Interest rates go up, recessions, profits fall, things like that. The next one is event-driven. And that refers to things like war, oil, price shock. certain things in emerging markets. So each one affects differently in terms of how it's going to go down, what caused it. This is obviously looking like an event-driven one, but what is a little concerning about it is just it's not just one thing. There's two things involved. There was the oil in terms of Russia and OPEC in terms of fighting for regulating the amount of oil that should be produced. As a result of that, everybody's producing more, which put a major shock to the system, as well as the coronavirus. So that's like a double whammy. The problem is that with all this going on, this could definitely drive us into a major recession. You don't know. I don't know if it will or will not. But, there's these two things together are really, really bad. One of the other things that people are not talking about as much is corporate debt. So over the years, because loans were very cheap, a lot of companies were loading up on debt because they'd be purchasing back their stock. So as a result of that, now the stocks have come down. They have high debt. So there could be other ramifications with this. The other thing that's also lurking in the back, and shouldn't affect it now, but I've always talked about, and it's talked about sometimes, but not that much, is loan modifications. So the problem with loan modifications is that with banks, so you're behind on your mortgage. You might be a year behind. They start hitting, you might be years behind. And they start hitting you with all these penalties and penalties upon penalties upon penalties. So then they say, okay, we'll restructure the loan so you don't have to pay as much. First of all, when they reduce it, it's not a lot. The second thing is they take what you owed and they put it on the back end, so you owe even more money. So that's a major issue. So I'm coming to a close to our show right now. Thank you very much for everything. If you need to get in touch with us, please contact us at Templar Cash for Houses. Thank you very much. Bye.
When investing your money, you need to be informed and open to new strategies. For instance, there are other options besides the stock market. You can partner with Templar and passively invest in real estate. Attend their special event Sunday, March 22nd at noon at the Marriott Courtyard in Parsippany. If you have investments in the market, you see that stocks keep going up. But what happens when the market starts to correct? If your portfolio has doubled in value since the last crash, did you know a fall of 30% could erase 60% of your gains? Don't let that happen to you. Get consistent returns through real estate. Templar can show you how to invest from your 401k, IRA, or equity in your house. Forget the stock market. Attend this special event Sunday, March 22nd at noon. Learn how to partner with Templar Real Estate. Call Templar now at 973-315-7990. That's 973-315-7990. Or sign up online at investwithtemplar.com. That's investwithtemplar.com. There's limited seating, so sign up now. Templar has an A+ rating with the Better Business Bureau.
The preceding program was paid for by Templar Real Estate. The views and opinions expressed are not necessarily those of the staff and management of WMTR. As always, it is advisable to consult a professional before making a major decision.